Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Pavitra Parekh. Prashant Nair is also joining in. Hi, Prashant.
Good to be here. Good to be back on the program.
That's it?
We're used to you talking more than that.
Hi, Pavitra.
Hi, Prashant. So it's looking like a good-looking screen, right, for our markets right now. We're pretty much at the high point of the day. So it's currently around 100 points higher on the Nifty. The Midcap index is seeing a little bit of an outperformance. So that one will also come up for you, around 200 points higher there. And across the board, even if you take a look at the rest of the Asian markets, it looks quite good. So the Japanese market, Hong Kong, they're both clocking in gains of over 1% right now. And Reema, what it really looks like, the IT pack has seen quite an up move today. That is the top sectoral gainer also.
Indeed. And talking about the big movers in the IT pack on the large cap end, or at least on the mid cap end, look at L&T Technology Services. That's gained about 3.5%. Persistent has rallied 3%. First Source, KPIT, L&T Infotech. Across the board, mid cap IT as a pack is taking charge today. And you can see gains between 2 to 3%. But the benchmark indices continue with their onward, upward climb. The Nifty has now conquered that 17,900 mark, and it's been a steady day of trading session. We had a bit of a gap up opening. We've built on it. And in the last 2 months, we've hardly seen any profit booking. If at all the dips have been extremely shallow and they've been brought into. So the going is good for the bulls, and the mid caps and the small caps are participating in trade. The advanced decline ratio looks healthy at 5 stocks in the green for 2 in the red.
All right, so let's take you through everything that we have lined up for you on the show over the next 1 hour as well. So market has built on opening gains to trade near the day's high. IT and FMCG as well as utility stock support, while autos and metals lag today. We'll discuss the market fundamentals with Devang Mehta of Centrum Wealth Management.
From the earnings corner, we'll be joined by the management of GNA Axles to discuss their quarterly numbers and the outlook going forward.
Stocks like MGL, IGL, Gujarat Gas, Aarti Drugs, Techno Electric are all reacting to some fresh news flow. All of the details are lined up for you later on the show.
FMCG major Wipro Consumer Care recently announced a foray into packaged goods. In an exclusive conversation with Wipro Consumer Care and Lighting CEO Vineet Agrawal told us what's in store for the packaged foods space going ahead. Okay, very soon we'll be joined by the management of GNA Axles. The company had reported its Q1 numbers a while back. It turned out to be a decent quarter for GNA Axles. A quick recap before the management joins in. The revenue growth stood at 14.3% on a year-on-year basis. Of course, the last year's base was quite low, impacted by the COVID second wave. Operating margins have expanded on a year-on-year basis to 13.3%. The profits are slightly lower, as as that picture will also come up for you on your screen. Profits at 27 crore versus 29.4 crore. GNA Axles does get a lot of revenues from the North American truckade vehicles in the form of exports. So since that piece of the market is doing very well, the exports for GNA Axles is a trend that the street is going to be watching out for. In fact, we've got the management waiting by with us. Ranbir Singh, the managing director and CEO of GNA Axles with us. Mr. Singh, morning. This is Reema here. Could you talk about the demand trends? Q1 has started off on a steady note. Can you talk about the domestic markets, the export markets? What is it that you're expecting for the rest of the year?
Reema, very good morning. Thanks for inviting me today. Regarding the demand about North America, actually we are in export, we are depending upon North America, Europe, and Turkey, Japan, and Asian countries. And demand is pretty good for North America and Europe also. In spite of in July, August, there are holidays in Europe. In spite of that, the demand is pretty good. This is for export scenario, but in domestic also at the same time, as you know, our dependency is on CV and majorly on the tractor market, off-highway. And off-highway is performing very good and demand is very strong. This is the scenario in domestic and export.
What can we expect by way of a revenue growth for full year? Can we do a 15-20% type of revenue growth? And if you could break that up in terms of domestic as well as exports, the guidance?
It is too early to say about the whole year, about the growth. As you see in last year also in first quarter or first half, the demand was very good and company has performed very well. But immediately after in Q3 and 4, the market has taken a lot of correction in the stocks or inventories. So our overall top line has dropped in Q3 and 4, and subsequently profit was also affected. But it is too early to say right now. But overall, this year we are anticipating around 10 to 15% growth in the volume and top line. As far as the profitability is concerned, it is affected, stressed because of the freight and the steel prices.
Okay, good morning, Mr. Singh. Thanks a lot for joining us. This is Pavitra. So, on the margin front, we have seen a steady improvement over the past few quarters. It's currently over 13%. You had earlier said that you will look at margins of 13 to 14% for all of FY23. You think you can do better than that now? We do have raw material costs also, which have cooled off significantly.
Raw material increases in India has gone up from April onwards, but major players, CV players, they have not settled yet about the first quarter, and it may affect in next quarter. But overall profitability, our company is maintaining these days between 13 to 14%. Earlier, it was over 15% because of freight and raw material prices. This is affected.
What's your current order book, Mr. Singh, and how would it compare with, say, same time last year?
It is slightly better for Q2, and Q3 also for export outlook is good. But we were anticipating after the North American inflation, we were anticipating demand will taper down, but it has not happened yet. It is still strong.
Any number on the order book that you can share?
Whatever we have performed in Q1, Q2 will be slightly better than that one.
Okay, Q2 will be slightly better. 50% of your sales come from the CV exports. Can you tell us a little bit more about what the North America truck orders are looking like, and what is the overall demand? Because you did mention that, you were fearing perhaps that because of all of these fears of recession and all of that, you could see some kind of hurt on the demand side. Has that come through at all, and what is the export order looking like?
Export, over 55% of our revenue comes from export, that is from North America and mainly from Europe. And those order books are pretty strong, and we are very hopeful this will continue till December and next year also. And on the other hand, we have developed programs, about 5 to 6 programs for our existing customers for EV also. So our components are in EV also. Our total revenue, over 1% revenue of the company comes from the EV shafts.
Do you see a great momentum in the EV business, in EV shafts?
Especially in the CV and light commercial vehicles. So it will catch momentum in next 2 to 3 years time. But at this moment, the most of the production enhancement in at global front, it is in the cars.
Okay. Any adjacencies that you're looking to get into, Mr. Singh?
We are at present not into the passenger cars. We are into SUVs and with the heavy vehicles. But whatever programs they have started, we are there.
Would you look to get into passenger vehicles?
We are not into passenger vehicles.
Yes.
We will remain into SUVs, multi-utility vehicles, and the multi-utility vehicles in electrical is going to happen very fast.
Okay, so passenger vehicles is not an area that you're exploring at the moment to increase the opportunity size. One final question, Mr. Singh. Okay, we've snapped that connection with GNA Axles, but the management says that demand has been steady. They were anticipating that perhaps in North America, the demand will taper off due to slowdown concerns, high inflation, but that's not happened. Demand from the North America, Class 8 trucks, the heavy vehicles continues to remain very, strong, and that's feeding into steady growth for GNA Axles, the company guiding for a volume growth of about 10 to 15%. And I think margins as well should be steady between 13 to 14%. Get into a break. Up next, we'll discuss what's happening in commodities. Stay tuned.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. The market is looking absolutely steady. It's over 100 points in the green, like we told you. But let's for now move focus and talk about the commodity space as promised. Manisha joins us, and today she's looking at zinc. Manisha.
Thank you for that, Pavitra. Yes, I am, because we've seen strong gains come in for the zinc prices. It has gained nearly 5% in this week itself, and the markets are running up at a 2-month highs, and we are trading above $3,700 a ton. It was just about a month ago, actually, that we were trading at $3,400 as well. So very strong gains coming in for this one. And the reasons have been plenty. To begin with, we have seen supply disruptions in Europe with the kind of energy price rises that we have seen. That seems to be really finding its way in case of prices there. And then there are concerns of supply disruption. There have been a string of smelters and producers talking about a lower guidance in sense of output in this year. The latest has been, and that is the reason because it has been unprofitable. The latest has been Dutch Narstar to halt production. They say they will do it from 1st of September. We have heard those kind of warnings coming from Glencore as well, saying that smelting and production of zinc in Europe is becoming unprofitable. Now, Glencore itself says that their refined zinc production is seen a decline in the first half of 2022 and could be negative in the second half as well. We have seen weak Chinese data, and while that had a knee-jerk reaction, but that has led to a surprise interest rate cut in case of China. China also has talked about injecting more liquidity into the international markets. And then apart from that, there also is more stimulus coming in for the infrastructure as a sector, and that has been supportive for overall metals, which are trading in the positive right now. For zinc, essentially, we have seen 3% of gains in this week, and it has outperformed on a monthly basis as well, with nearly 22% of gains there. The run-up also comes in on the back of high energy prices. Until now, when you look at zinc, it was 40 to 50% of cost of production, which was energy, which currently now stands at a huge 80%. When you look at production and inventory numbers, those have continued to decline as well. This is the kind of closure in sense of smelting estimates that Macquarie has put out. So in 2021, we saw a decline or a capacity shut of 138,000 tons. This year is estimated higher than that at 150,000 tons. Same is the case with the inventories as well, which have continued to decline. Last year, same time, LME zinc inventories were at 240,000 tons, which are now at 75,000 tons. So everywhere that you look, there is support coming in.
Manisha, thank you very much for that. From zinc to the other commodities, crude oil prices have been under pressure overnight as disappointing economic data from China fuels recession concerns. Clarity is also awaited on Iran's response to the European Union's nuclear deal proposal. Brent crude prices is currently trading around the $93 per barrel mark, but last week we were inching towards $100 per barrel. Listen in to some important opinion that we got earlier from Goldman Sachs' Jeffrey Curry.
Investors are also liquidating their positions. And why I call it irrational is you have prices going down and inventories go down. So bullish fundamentals with downward price action is not sustainable. This is dynamic. We have seen it before. You destock in anticipation of a recession, market gets really tight, and then you explode to the upside. I'd like to point out there's 3 reasons why investors don't want this space. 1, a history of really bad returns. They were nothing short than epic losses 2 years ago with negative oil prices. 2, the volatility is unbearable. Think about how many times we've round-tripped between $95 and $130 a barrel this year. And then 3, I would put ESG factors that discourage investors. So there's a lot of reasons why they're not in this space, and they're beginning to shun it. And one of the big factors is just the volatility.
All right, that is the word coming in from Goldman Sachs on the crude prices. But now it is going to be the Iran nuclear deal, and any news flow with respect to that we will watch out for as far as crude is concerned. We'll get into a short break now, but when we return, we're going to talk about the money market, and we'll get you the latest on what...
Okay, it's as strong as they come. I mean, the market's up 100 points, 17,923 on the Nifty, and rock solid, absolutely. I mean, you look at 10-minute candles through the course of the day, and it's quite remarkable that it's basically been slowly but surely trending higher. A candle, 2 candle passes. These are 10-minute candles I'm talking about. But then in the third or the fourth, I mean, the previous high is taken out. So it's slowly creeping up, and it looks like a trending day unless and until something changes. So will it be a big, 1-2% kind of a day? Perhaps unlikely. But I mean, even having said that, a 100-point gain after the kind of many weeks we've had, I think talks about the strength and the desire to buy any dip whatsoever which emerges along the way. Now, on the bond market side, bond prices are soaring to 2-week highs. Yields are falling while rupee has erased some of last week's losses. Lata is here with action in those two markets. Lata, hi.
By bond market standards, it's a remarkable rally. And it's like all good things have come together for the bond market. The yields are now at August 4 levels. And if this is pierced, you go below 715, then you actually reach April lows if the bond yields were to fall further. And it's every kind of good news. The first one, of course, being crude and the softening impact on US yields as well. But there have been domestic reasons as well. And that's the July inflation coming in line. But more importantly, it's a 4-month low. I mean, it's peaking off for the past 4 months since April. Likewise for the WPI. And that extremely positive for bond markets because beyond a point, you will start trimming expectations of rate hikes from the RBI as well. But I think the bigger one is this chatter in the bond markets that JPM may have to include Indian bonds in their index sooner rather than later. You know, we went into watch in October of 2021 and you're already 1 year in watch. So the next meeting, I believe, is in September or October. And you have to take a decision one way or the other. And the expectation is that it could well be that there is an index inclusion. So all that's working in favor of bond yields. The rupee, also a beneficiary of the crude sentiment, but more importantly of FPI flows, which are now, 2 billion in the last couple of weeks. And the rally could have been even smarter in the rupee, except that for 4 days, people could not buy dollars, importers. And so there are some bunched up buying that is keeping the rally a little muted. Once that bunched up is over, the expectation is that rupee could rally all the way to 78.50.
All right, Lata, thanks a lot for getting us all of the details and the movement that we're seeing in the rupee as well as bond prices. With that, let's move on and talk about some individual stocks. City gas distributors are seeing some cuts today. So MGL, IGL, Gujarat Gas are all seeing some cuts. This is after CNG and PNG prices have been cut. So Sonal is here to tell us more about that. Sonal.
That's right. City gas distribution companies, they are in focus because Mahanagar Gas has gone ahead and cut CNG and PNG prices. CNG prices cut by 6 rupees per kg, PNG prices by 4 rupees per SCM, taking the CNG prices to 80 rupees per kg and PNG prices to 48.5 rupees per SCM. This comes in after the government increased domestic allocation of gas to city gas distribution sector, which was beneficial for these three companies. Now, IGL and MGL, out of the three city gas distribution companies, has a higher allocation or higher exposure to a priority gas allocation. Companies like MGL, they have now passed on the price cuts, so they will be able to maintain margins. And this was the big talking point, whether they will actually pass on price cuts or not. The other reason why these companies are seeing some profit taking today is the fact that these stocks have run up a lot. Month-to-date gains, look at it. MGL up 20%, Gujarat Gas up 6.5%, IGL up 25%. So there is some profit taking also, which is on the cards. CLSA had put out an interesting note on 11th August when this was actually announced, where they said this is a near-term relief, the domestic gas allocation increase, and will allow 15% cost savings to all these companies. So it was an expectation, or the street wanted to see whether they will actually pass it on or not to the consumers, and that is what the final gains will depend on. Now that they have passed on, these companies or these stocks are seeing some profit taking today.
Thank you very much for that. So profit booking on the cards for city gas distribution companies. A stock which is running away is Bharti Airtel. So there was a flash that you saw on your screen. So basically the company participated in the recently concluded 5G auctions. Now, as a part of the payment structure, telcos or companies had to make a payment over the period of 20 years. They did not have an upfront payment, which was there earlier. So they had to pay the overall amount, the principal plus the interest, over a period of 10 years. What Bharti Airtel has done is that they have paid 4 years worth of installments upfront. So that's a figure of about 8,300 crore, which means for the next 4 years, they do not have any 5G related spectrum payout outgo to the government. So this will free up the company's cash flows and it will help the company foray into 5G, help with its rollout. And plus, the company said that, as a part of their rights issue that they had announced, they still have one call option which they can call out, which means the company has the potential to raise 15,000 crore rupees via the rights issue. So that will be additional money which Bharti Airtel can get as it gets ready to roll out 5G. So good news coming in from Bharti Airtel managing their cash flows in anticipation of 5G. The stock has moved to the high point of the day. Another one which is on our radar right now is Aarti Drugs that surged after DGTR has recommended continuing anti-dumping duty on the imports of an antibiotic from China. Ekta is here to tell us more about the news and the impact.
Hi, thanks for that. Well, yes, Aarti Drugs is seeing a surge in trade. That's because the government has, in fact, recommended the continuation of an anti-dumping duty on ofloxacin imports from China. Now, remember that it basically is an API intermediate which is used to manufacture this particular antibiotic. And the API and intermediate is manufactured by Aarti Drugs. It's around 8 to 9% of their total sales. So it's definitely a shot in the arm that this particular company will benefit if in case there is an anti-dumping duty which is applicable for ofloxacin for a larger period of time. Now, just to give you a background, that there was already an anti-dumping duty on this particular API/intermediate, but what happened was that it had expired during 2020-2021, and after that the government reinitiated a probe to see whether or not the anti-dumping duty should be applicable going forward. After collecting the requisite information, the government has now, or the recommendation is that there should be an anti-dumping duty which should be applicable on this. Now, while prices had fallen for this particular antibiotic/API intermediate for it, it has stabilized at around 3,000 to 3,100 rupees per kg in the past couple of months. That's simply because it has also been impacted by the volatility that we've seen in raw material prices as well as input costs, and hence it has stabilized at these prices. So irrespective of that, the anti-dumping duty has been recommended, and going forward this should definitely provide some support to prices according to Aarti Drugs.
Okay, thank you very much for that. Another one which is on our radar is Techno Electric. The stock has surged close to about 8% in trade. This is after the company bagged a big order worth 1,455 crore from Rajasthan. And this is the second big order announcement from the company in the current quarter. On 13th of August, so that's less than 4 days ago, the company had announced an order win of 680 crore, which means in the current quarter, we're looking at order wins in excess of 2,000 crore. And this compares very well with the 800 crore of order wins that it had in the whole of last year. So FY22 order wins were subdued at 800 crores, but this year, in the first 2 months of the year, the company has already won orders worth 2,000 crore rupees, and this perhaps will help the company scale up on its top line. The revenue growth in the current quarter was fairly muted. It was down year on year and on a quarter on quarter basis, and the lowest that we've seen in the last 2 years. So, you know, the fact that Q1 revenues were subdued, but there is hope that things will pick up because the company has won 2 big orders totaling more than 2,000 crore rupees. So that's the update coming in on Techno Electric.
All right, Rima, thanks a lot for filling us in with that. The stock is up around 7% as we speak. But let's now also talk about the markets, because that is up over 110 points right now. So looking very strong right now. Let's invite our technical guest on the show. Mitesh Thakur of earningswaves.com joins us now. Mitesh, good morning and thanks for joining us. So it's absolutely solid for the market right now, 110 points higher on the Nifty. The Midcap index is over 220 points in the green right now. And it looks like we are heading towards that 18,000 kind of mark for the Nifty. How would you approach this screen today?
Yeah. So, good morning. I think I agree with that. The Nifty is looking very strong. And, you know, despite the fact that last 3 days, I've been worried about the overbought readings on the hourly and the 2 hourly charts, the market hasn't shown any sign of weakness. In that sense, I think the Nifty is possibly now heading towards 18,025. If you look at the historical chart, 18,025, 18,050 was the pivot area on the 4th of April when the market kind of made a significant high and then retracted from there. So we'll keep that 18,025.50 as the target zone. And on the stock side, HUL is something which is breaking out. So that's a buy. I would suggest a stop loss just below levels of 26.54 and a target of 27.50. And the other one which I like is HPCL. That's also breaking out. That's a buy with a stop at 257.5 for targets of 275.
Okay, the going is still strong. Mitesh, in fact, had recommended that you could go long in the dying minutes of yesterday as well and play for a gap up opening. And if you had taken that trade, it would have worked pretty well for you. Get into a break on that note. On the other side, we'll talk more about the markets. Devang Mehta of Centrum Wealth Management.
I mean, things are looking pretty solid, and it's been that way from the morning. That's a remarkable thing. No hesitation, no look back, just a trending, smooth, not exactly all smooth, but a slow-moving and kind of a smooth day up is what we have. But the Bajaj twins, of course, are having the most outsized influence, but it's not contributing. I mean, 35 of the 100 index points are coming in from Bajaj, so that's 35% of gains from the Bajaj twins. Reliance is adding another 12 index points. So, you know, between the Bajaj twins and Reliance, that is, 45 points or so. And then you throw in an ICICI Bank that's, those four stocks, essentially about 50% of the 100-point move that we have going on as far as markets are concerned. Again, it's not as if there are very large outsized percentage day-on-day gainers. It's just that very few things are actually lower. Kotak, Mahindra, Maruti, HDFC Limited and Cipla are some which are actually marginally down on a day like today. Devang Mehta is with us of Centrum Wealth. Devang, pleasure having you with us here in the program. Thanks very much. So the rally has continued, and it's tempting to think, isn't it, that FIs, while they've been buyers, they've bought a little around $4.5 billion of stock. As they were selling, they sold almost, $30 billion, right? So the mind wonders, what if another $5 billion comes in? We're about 3% from previous all-time highs. Devang, your thoughts?
Prashant, absolutely right. So $33 billion of selling, to be precise, from October of 2021, and it was sort of relentless. I think, though it will seem like a hindsight view, but let's be very, very clear. 1.5 months back on the same show with you, I think we were dissecting certain points about how interesting the market is becoming in terms of valuation. So look at a price-earning ratio 1 year forward or even 2 year forward, or even a price to book or a market cap to GDP, or even 200 BSE 500 stocks. Most of the stocks were trading below their 200 DMA, though we don't look at technicals very closely. But even the fund managers survey or the fear and greed survey, all these surveys were pointing out towards a smart recovery. Of course, nobody would have imagined about the magnitude of the rise. And in fact, every rally that comes after such a large fall is termed out to be a bounce back or a relief rally or a dead cat bounce. But just 3%, 4% away from a life high in terms of Sensex, Nifty, or benchmark indices. And in fact, I was also reading somewhere today that the Nifty, even the midcap index is up 25% from its lows and just around 5-6% from its lifetime highs. So I guess this is a real rally. As you rightly said, just to $3-4 billion of foreign inflows, 16,000-17,000 crores of flows in August precisely. But the confluence of factors, what is important, Prashant, is what we saw in the last few months, couple of months. One, the credit growth in mid-teens, right? The banking sector is growing very fast. There is capex happening thick and fast. There are also certain macro indicators which are indicating a very smart recovery in Indian macros. Micro, again, the numbers which were touted to be very, very bad for the first quarter does not seemingly came out to be that. The management commentaries were also not as bad, and crude from 130 to maybe 90 to 93 as we talk. I think there are a lot of factors which have played out rather than only FII flows. So my sense is that probably we have seen those dark side of inflation and interest rates as fears. Probably with festive demand coming up, with festive cheer coming in, discretionary consumption on the rise. My sense is that the worst days seem to be over. Yes, of course, market is risen a little too fast for comfort. It may take a pause somewhere, and the mid cap and the small cap side of the broader markets can start and perform.
But Devang, the rally of the last 2,500 points was predicated precisely on what you said, that credit growth is picking up. The street has priced that in. The capex, the order wins for the capital goods companies has been fairly strong. The commodities have seen a downturn. So the markets have already priced in these positives, which is what explains this 2,500 point rally that we've seen in the last 2 months without a break, without any interruption. What from here on? What can positively surprise the markets to drive a further leg up?
I think the markets now probably have sort of come out of the rhetoric of inflation and interest rates or high commodity prices. So we know that commodity prices are headed lower to be probably in a way. Second is inflation cooling off a little bit. Again, it's not cooling off as the economies would want it to be. But most of the inflation data in the last 2-3 days in India also saw that with good monsoons also, and with RBI talking a little more positive in terms of being not accommodative, but at least not shotting the bullet and talking about very high interest rates over a period. I think one thing is now digested by the market. Second, I think the market now looks at individual companies, individual sectors, and a lot of sectors have now come to the fore. So this recovery has generally been very smart across the board, right from auto to BFSI to even IT now seeing a bit of buying. A lot of these sectors have come back, discretionary consumption. A lot of these companies like the Page Industries or Titans of the world or even Asian Paints and Pidilite, be it building materials, are all very close to their life highs. So my sense is market is now looking at forward earnings. The commentaries have been good. A lot of these companies have been able to take price hikes. So earnings is, I think, the center point which market would look at without any geopolitical tension which can come to the fore. I think we have probably headed higher than lower.
All right. Hi, Devang. Good morning. So, last time we spoke, you were talking about how you like the entire FMCG space, the consumption space, building materials, autos, and you expect quite a bounce in that. We have got that bounce, but do you think even at these levels, it's advisable to, get into these spaces?
Pavitra, what we did is after seeing a huge fall, so of course it makes you a lot more sort of matured when you do a hindsight analysis. The last 6 months were particularly very bad. From July, we saw good recoveries in our portfolios. But what happened is when we went back to the drawing table, we saw that all these companies, the sectors that you talked about, the consumption sector, IT, building materials, a lot of these banks who are sort of market leaders or emerging market leaders, even a lot of mid-cap companies which are part of our portfolios, we went back and checked that whether these companies in difficult cycles also grow, whether these companies in the last 3 year, 5 year, 10 year, and what are the forward-looking estimates on the Bloomberg or the consensus estimates for the next 2-3 years. We found that a lot of these companies, the model portfolio that we run has an average ROE of 27 to 30%. The portfolio is about to grow at 26% and 24% for the next 2 years. So most of these companies, though we have seen a bounce back in the stock prices, but yes, valuations are also getting a little richer. But you have a lot of margin of safety when you buy these good companies or great companies in your portfolio. So my sense is yes, from here on also have an approach of buy on dips, however cliche it may sound, but that is where you will create a lot of wealth and preserve wealth as well as multiply wealth.
Devang, so let me ask you what else you like, Devang, right now with after the run-up that we've seen, and then one question of my own, which is Muthoot Finance, which is which crawled up actually to about 1200. It's in one kind of one day cut, it's gotten down to 1050 back again. Any thoughts specifically on that? First, what do you like, and then if you have a view, Muthoot Finance.
So clearly, I talked about a lot of sectors like building materials, discretionary consumption, non-discretionary consumption, all this. But one sector you can't miss. Of course, again, it's a consensus call. I know people will say that, but BFSI as a universe, banking, financial services, insurance, NBFCs. Now, if you want to play 2-3 different type of themes, one is riding on the wave of financialization. Second, you want to participate in the so-called capex. Third, you want to also participate in the credit growth story, which is right now emerging, as well as divesting your savings to a place where it will become a lot more productive. I think you can't miss out on top private banks, of course, which is again plain vanilla play, or a couple of NBFCs, consumer NBFCs. We are seeing how FII flows can impact the likes of Bajaj Finance, Bajaj Finserv, the twins, and these are always written off in bear markets. But probably when bull market comes in, all this receive the first amount of flows. So one is your private banks, NBFCs. The third is very importantly, insurance is a sector which suffered big time in the last 2 years because of higher claims for life insurance as well as the Mediclaim for general insurance. So one gets a sense here that probably the top lines are rising, but the bottom lines were shrinking or rather not expanding. You will get a good base effect in this insurance companies as well as a lot of intermediaries which are also riding the wave of financialization. So one sector I think you should not miss out, and these are all companies which have come down to reasonable valuations. My sense is yes, there is a lot of money to be made on the table on BFSI. Regarding a question on Muthoot, unfortunately, Prashant, I don't cover that, so so I wouldn't be able to give a Q1.
Trading are they're seeing a little bit of a slide right now, but it's still around 88 points higher on the Nifty, so just a little bit lower over there. The midcap index is still holding up with gains of around 190 points. But let's get you an exciting conversation. FMCG major Wipro Consumer Care recently forayed into packaged foods a decade after exiting the vegetable oils market. Now, with the latest foray, Wipro Consumer will launch traditional Indian snacks as well as spices in the first phase and hopes to grow this into a 500 crore business in the next 3 to 5 years. Shilpa Ranipeta, my colleague, spoke to Vineet Agarwal, CEO of Wipro Consumer Care, enlightening on what's in store in the packaged food space and lots more. So here's a slice of that exclusive conversation.
We were looking at categories to expand. We found in food specifically traditional snacks as well as spices being fairly large categories. And just to give you a sense that in India itself, toilet soap, which is one of the largest or probably the largest personal care category, is about 21,000 crores, while the traditional snacks category would be 3.5 times that, including unorganized sector.
Now, you said you're following a state-wise strategy. Can you tell me which state you'll first launch in and what categories of packaged foods are you looking at?
So we would like to look at traditional snacks and we would like to look at South India. So when I say traditional snacks, it'll be things like murukku, banana chips, masala peanuts. Obviously, we don't have a food brand name, so it'll be a new brand name altogether. We're still working on that. Traditional Indian snacks as well as spices both have strong local players which we can look at acquiring to jumpstart the business.
And Mr. Agarwal, when will this new brand and the products hit the markets? Like, what's the timeline that you're looking at?
No, so if we go purely organically and starting from scratch, because we have just announced it, we are in the process of setting up a team. I don't think it'll not take anything less than 9 months to 12 months to launch our own product. However, if it is an acquisition, it'll be obviously faster. If it's just purely organic, I would say that if we reach a 500 crore number in 3 to 5 years' time, I think that should be reasonable. But if it's acquisition, it should be faster.
Now, coming to the overall business, how's the recovery been in the last couple of months? Because now industry data has shown that personal care as a category is lagging compared to the others. Are you also witnessing the same?
In a brand like Santur, the top line has grown very well, largely because price increases have taken place. Volume growths are flat to very marginally negative. But if you look at Yardley, which is very, very premium, that's grown very handsomely, both volume as well as value. So the urban rich don't seem to have got impacted, while the rural poor or the urban poor has got impacted a lot more. Our impact in Q1 was almost about 6% from a gross margin perspective. However, the price of cool down of palm fatty acid almost as low as last year, marginally even lower than last year, and therefore Q3 onwards, I think our margin should be back to normal.
Okay, that's an interesting chat from the FMCG space. Now, State Bank of India has launched its first branch dedicated to startups in Bengaluru. From the sidelines in the launch, CNBC-TV18's Ritu Singh spoke with the chairman of the bank, Dinesh Kumar Khara, and began by asking him about his perspective on the bank's decision to tread into startup space, given the macroeconomic uncertainty very much evident there. Listen.
The startups' source of funding from the equity will get dry up. Then perhaps they need, the one which are viable startups, they need money from the credible partners. And that's why here is the State Bank of India, which is not a fair weather friend, which is a friend for life. So that's why we are here, and we are looking at all such opportunities where the startups have got a viable business plan and where they have got a plan which can generate revenue for many, many more years, which can offer solutions. I feel that there's going to be ample opportunities even going forward, because they are actually creating value for many large ecosystems also. So I think, to my mind, there is always a good opportunity. Whenever there is some kind of a turbulence in the market, it's the right time for steady players to come and ensure that the market stays stable.
Just a final question on the interest rate scenario. Rising interest rates and a bulk of the lending rates are already linked to an external benchmark. Is there any sort of impact on home buyers, people waiting on the fringes because of these rising interest rates? Is that demand getting impacted?
I have not seen the demand tapering off, and earlier also my impression is that if at all interest rate goes up marginally, then perhaps it may not have any significant impact on the demand for the homes, and the kind of trend which you have seen till now, it actually supports this belief which I have.
जो हर रोल में फिट हो और हर घर में हिट हो, जैसे सिस्का एलईडी। सिस्का एलईडी, लाइट इयर्स अहेड।
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
हमारी कार कितने में निकलेगी?
सर ये वाह, यस सर, OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस।
सुनीता, सुना तुमने ये क्या बोल रहे हैं?
यही कि OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस।
बाबूजी, सुना आपने सुनीता क्या बोल रही है?
ये सब यही बोल रहे हैं कि ये प्राइस ही नहीं, सरप्राइज है। विजिट olxautos.in।
Welcome back. Steady as she goes at 17,900 plus on the Nifty, a gain of 0.5%. The midcaps are moving in step. Midcap index is up 0.6%. Apollo Tyres has gained handsomely for the second straight day. Yesterday as well, it was up about 6-7%. It's added on another 3.5% today. The stock has hit a fresh 52-week high, so Apollo Tyres should be on your radar. People are checking into hotels despite the summer season being over. So Indian Hotels has gained close to about 1.2%. That too is hitting a fresh 52-week high today. In fact, the entire hotel space is active. So Kamath Hotels, small volumes, lower market capitalization, but Kamath Hotels too has surged close to about 3-odd%. In the frontline pack, as we've been pointing out, it's the Bajaj twins, Bajaj Finance and Bajaj Finserv, which are leading the charge. So the gains are getting stronger. Bajaj Finance now up 4.5%, while Finserv has gained close to about 6-odd%. HDFC Life has been steady. It was a big mover yesterday with a rally of 4.5-5%. It's added on another 2.5% today. Hindalco is climbing up just as we speak. Bharti Airtel has been steady and up 1.5% after the company paid 4 years worth of upfront installments for its 5G spectrum dues. But that's the update coming in on the markets. The Nifty Bank is trailing a tad bit with a gain of just about 0.1%. We'll now get you some important market opinion that we got earlier today. We chatted with Vineet Sambre, the head of equities at DSP Investment Managers, and he says market fundamentals look good at the moment, and he expects the mid and small caps to outperform.
Most of these commodity inflation sort of tapering off, there is an expectation that as we head into the next few quarters, let's say third and fourth quarter, it will, things should be better off from the profitability front for the companies. Plus, the ensuing festival season should also uplift some bit of the demand momentum. So I think all in all, that has got factored into the markets level today. And the way to sort of think maybe from the levels perspective, I mean, there's no point in sort of predicting these levels, as we generally get caught on the wrong sides most times. But I think more importantly, the fundamentals seems pretty good right now. Real estate is doing well. We saw the order book position of a lot of these engineering and capital good companies. I think they are at their all-time highs today, which is also a signal of a lot of activities which are happening and sort of likely to benefit these companies. So I think some of the larger segments, and banking, one of the largest, is actually started showing good credit growth. So all in all, I would say things are being on a cyclical upswing, which bodes well for the long-term outlook of the markets. I think there is a good amount of uptick which we have seen across few categories within the discretionary. Largely auto right now seems to be pretty resilient, and we were sort of anticipating some bit of cyclical uptick there. So that has come out well. But I would assume that when we look at the data points of most categories which are likely to be beneficiary of the opening up of the economy, people going out and spending, I mean, those are happening. The urban centers and the metro centers are doing well. the one side, which is the rural and the entry level or the mass category, is struggling a bit right now, which to us also is most likely, should come back as we see, some of the rural outputs coming out better with good monsoons and good reservoir levels. Within the retail, I would say footwear, the food retail companies, I mean, these are the ones where we are optimistic and we hold them in the portfolios as well. The industry has gone through, cyclical downturn because of COVID. We had school, colleges, offices all shut. And now, most of these institutions, as they open up, I think the demand momentum should also normalize. So, the category, it's a 80,000 crore market, and the companies here, they organized maybe 5 or 6 of them who are large, leading companies with good distribution, trying to do a good job in terms of the brand improvement, the positioning. Mid-cap and small caps as a category, they are, they generally actually provide a good amount of, growth opportunities for investors with a long-term mindset. Most of the companies, they have, there are a lot of leading companies which actually don't find the large cap universe, let's say it is ceramic names or a lot of home improvement businesses. And I agree as a category, and you find them in the mid cap or the small cap universe. So the only way to play some of these large opportunities which can grow multifold is available there. And I would sort of continue to hold my view that over a longer term, mid caps and small caps should generally outperform.
All right, that is some interesting market opinion coming in, and the market has actually come off a little bit, around 20 points off the highs. You are seeing Reliance, ICICI Bank as well as HDFC Bank, which have seen a little bit of a slide, and with that the Nifty Bank is now inching towards the flat line. It's just around 50 points in the green right now. But with that, we're completely out of time on this edition of Trading Hour. From the entire team, thank you for tuning in. Halftime report comes up next.